Hello everyone, I am Nupur Saxena and today we'll be discussing about management audit. Following is the outline of the presentation. We'll be starting with meaning, objectives, process, importance, appointment of management auditor, management audit report, and then finally the difference or relationship between management audit and cost audit and management audit and statutory audit. Now, what is meant by management audit? A management audit is an independent review and investigation which is concerned with the identification of those functional and operational areas where management has failed to achieve the required external standard of performance and with evaluation of management decision making with the aim of monitoring and improving the total efficiency and effectiveness of the organization. So management audit is basically done to review the decisions taken by the management, whether they are correct, whether they need any improvements or not, and where are the areas where the management is lacking, in which improvement is needed so that the organization can earn higher profit. So basically all the wastage will be eliminated and the best process will be identified through management audit. So the objective of management audit are first to pinpoint the defects or weakness in functional areas and suggest improvement to obtain the best possible result. Then it also helps the management to increase profitability by giving remedies to maximize the organization's resources in an efficient way. It also highlight the inefficiency in the different areas of management and gives suggestion for improvement. It also assists various level of management in the effective discharge of their duties and responsibilities. It also suggests ways and means for achievement of the objective and the target of management, and it also assists the management to establish coordination among the activities and the employees of the organization. The process of management for audit is as follows. First, the management auditor needs to identify the objective of the business. The objective should be identified and examined that whether they are clear, specific and reasonable or not. He should also assess the adequacy of the objectives for earning reasonable profit, growth and survival of the business and fulfilling social obligations. Then next step would be segregation of overall objective. So the overall objective that has been identified in the first step, it needs to be broken into detailed targets and plans for various segments. After the segregation is done, the organizational structure will be reviewed that whether it is adequate to effectively achieve the overall objective and detailed target and plans or not. Then responsibility centers will be identified. So for this, the auditor should identify various areas of managerial control within the firm in order to locate the probable weak points and develop or suggest the control measures. Then in next step he will review the performance of each responsibility center. So the performance of each responsibility center is examined and if possible should be expressed in measurable terms. So it is compared with the set target for this thing. And then finally comes the reporting part. So the auditor, on the basis of the above review, prepares a report on the overall performance of the organization. So he may give recommendation to improve the efficiency and effectiveness of the organization on the basis of the review. Now comes the importance of management audit. So the importance are, first, it pinpoints any inadequacy or deficiency in the entire process of management. Then it also helps in reviewing the overall plan, policies and procedures, and also helps in taking corrective action for the same. It improves the coordination in the functioning of various departments. It also helps the management in taking taking decisions. Then it helps management in the preparation of budget and resource allocation, and also in training of personnel. This also encourages creativity and innovativeness among the managerial personnel. It helps in reduction of cost by suggesting ways to reduce the unnecessary wastage and losses, and all this will ultimately lead to overall increase in the profitability of the firm. Now comes the appointment of management auditor. So management audit is not compulsory under any law. The shareholders or board of director may appoint the management auditor. There is no specific qualification that is prescribed for the management auditor, but generally, chartered accountant are appointed as management auditor. The auditor should have sufficient knowledge about the techniques to review management control, methods to conduct intensive analysis of information needs, and assessing the efficiency of the existing system in meeting them, conducting financial analysis, etc. The terms and conditions of appointment, the scope of audit work, the period to be covered, the time frame of submission of audit report, and other similar issues are settled through the letter of appointment of the auditor. Now comes management audit report. The audit report should be clear and unambiguous. Although there is no set format of management audit report, but generally it is divided into three basic sections. The first section describes the scope and nature of examination. In the second section, the auditor evaluates and compare the past and present performance. And in this third section, the auditor evaluate the current management procedure and also suggest improvement, which must be backed by some factual evidences. Now, this is important. It shows the relationship or difference between management audit and cost audit. So, management audit, it is basically a comprehensive and critical review of all the aspects of management process, whereas cost audit is basically deals with verification of correctness of cost account and of the adherence to cost accounting plan. Talking about scope, it is not a statutory requirement to conduct management audit, and management auditor critically examines the policies and objectives of the management report on their suitability and also gives suggestions, whereas cost audit is a statutory requirement in case of certain companies, and its scope is narrower since cost auditor confines himself to check the cost accounts only. Period under audit. So management audit covers wide area of management activities, and maybe more than one financial year is covered, whereas in case of cost audit it is conducted for every financial year separately. Now in this we'll be discussing about a relationship or difference between management audit and cost audit only. So appointment of auditor. Management auditor is appointed either by board of director or shareholders, whereas cost auditor is appointed by board of director with prior approval of central government. Now talking about the qualification of auditor, so there is no prescribed qualification for management auditor, but he must be a person who is having knowledge and experience in the field of accountancy, management and financial administration. Whereas in case of cost auditor, he must possess certain requisite qualification as per the provisions of Companies Act 2013. Now submission of audit report. So the report is submitted to the management within the time period mutually agreed upon in case of management audit, whereas in case of cost audit, the report needs to be sent to the board of director. Now we'll be discussing about the relationship or difference between management audit and statutory audit. So management audit is comprehensive and critical review of all aspects of management process, whereas statutory audit is an audit which is authorized, governed and made compulsory under any statute. So the scope of management audit is determined by the engagement letter, the letter of appointment of the auditor, as discussed. Alright, but in case of statutory audit, it is determined by the statute. Period under audit is more than one financial year is covered in case of management audit, while in case of statutory audit, only one financial year is covered. Board of director or shareholders appoint the auditor in case of management audit, whereas in case of statutory audit, the appointment is made as per the statute's provision. Qualification of auditor. So there is no prescribed qualification of auditor in case of management audit, but in case of statutory audit, it is laid down under the statute. So with this, we have come to an end of this chapter. Hopefully you have understood everything and enjoy learning.